Right, and we should be live. Sorry for the delay, there were some technical issues. So first of all, good morning, good afternoon. Oh, there is Peter. There we go. Hi, Peter, I will just wait for you to connect to the audio. Peter, can you hear us?
Yes, I can.
Okay, great, thank you. So hi everyone, and sorry again for the delay. We had some technical issues, but everyone's here now. So good morning, good afternoon, and good evening, depending on where you're dialing in from, and welcome to this panel session. So although we are still in the mid of the second wave, we will look forward today at how a credit department might look like in a post-pandemic world. So my name is Eefje van Craen, and I'm responsible for Central and Eastern Europe for the credit and procurement risk projects at Bureau van Dijk Moody's Analytics company. And I am delighted to introduce you to our panelists of this session. So I'll start with Pia Porvari, joining us from UPN Finland. After working several years as head of credit, she is now director in customer operations in finance. We will remain in Finland, where we have Peter Maiolo from Metso Outotec. Peter is the global process owner for accounts receivable. And then moving on to Germany, where I'm happy to introduce you to Mark Posthumus, who is the regional head of process for the order to cash at Henkel. So thank you very much, guys, for joining us. So we will kickstart the session with our first poll question that will appear on the screen in just a moment. There you go. So you should now all see the polling possibilities. Please also note that you can raise questions via the chat box throughout this session, and any questions and remarks are obviously very much appreciated. So I see that the votes are coming in. I will just wait a little longer until everyone has had the possibility to do so. There we go. Let me give it a couple more seconds. There you go. Perhaps I will raise already a question to the panelists. Well, first of all, how confident are you in the effectiveness of your current credit assessment procedures, given the impact of COVID-19 this year? I don't know who would like to start. Pia, ladies first.
Pia,
yes, I can start. So we already took quite a big leap with our credit assessment processes a couple of years ago, which of course now is a very good thing, or has been for this year. But we kind of semi-automated our risk scoring process, which then allows the team to focus on the medium and high-risk customers, and as well then the release time for really on those buyers where we don't have financial insight, because it's an issue with some of the markets as well, as we know when we deal globally with the customers. But yes, we are currently very confident with the processes that we have. When the COVID-19 impact hit us, we also added some more visibility so that we flagged the customers that we identified having a COVID impact. The identification happened in form of request for a payment plan or extended terms, and then that allowed also us to really closely monitor those customers where we had really identified the impact as well.
Okay, great. Mark, would you like to comment on that?
Yeah, so actually we're also very confident. It took us by surprise, I must say. And it also showed us ultimately how dependent we are on external information. So I think it put in light, and I think this is also conversations that we had with Bureau van Dijk in this case, whereby we also asked, okay, how can we capture, because ultimately if we're looking into data which is from 2019, it's at any point in time it's always outdated, but particularly in a COVID environment it's completely outdated. So we're very comfortable with what we have, and also quite happy that we were able to, together with you ultimately, to come up with a solution that captures this. So I think we need to still grow into the sense of being more reactive, so being much faster and far more agile when it comes to reviewing the customers.
Okay, thank you. Peter?
I could say the same. We're very confident the systems that we built pre-COVID really really changed the focus from what was otherwise external reports to really a more holistic approach, using mainly our own data and better use of our own data to do the analysis, etc., coupled with the expertise of BVD, etc., to really come up with a better system. And, you know, incorporating things like the Global Alerts program and some of the other things have really enabled us to hone in on what is otherwise the high risk customers that we sort of have globally around the world.
Mm-hmm. It's an interesting approach to obviously also, well, you have a lot of data internally available to also include that in the whole process. Can you elaborate a little bit more on what data items then that you take into account?
Well, when we looked at the design for the system, previously we were, you know, very simple. We were probably just looking at things like exposure and credit limits, etc. Now the system not only incorporates that external data, albeit sometimes a little bit dated in terms of the reports, but it's become a weighted analysis of the internal data as well, particularly a focus on customer payments, DBOs, payment plans, etc., as well as other aspects like dispute management, etc., that we've incorporated into the holistic model, if you like, so that we can spot and run some analytics behind sort of identifying those customers which fall into the high risk categories, so we know who they are.
Sure. Okay. And then you think moving forward, because we hear that a lot, that we're now, let's say, moving towards even, you know, profiling of customers. Is that also something? And then we also use, obviously, you know, artificial intelligence, etc. for that. Is that also something? And that's a question to the wider group, of course. Is that also something that is playing at the moment within your teams? Don't know who would like to comment on that. Obviously, it was a question to you, Peter, but it's also a question to the others. Mark, I see you laughing.
Yeah, no, from our side it is. So we are trying to look into building a predictive score. I mean, mind you, Henkel is a global company. We don't always have the same level of information available everywhere. For my part, I take care of Europe, which is both East and West Europe. We're quite, I mean, comfortable in the sense of a lot of data availability. Once we start looking into LATAM or AMEA, that data is not necessarily available. So we have to rely far more into internal data and to develop there through artificial intelligence models which are working, which are giving us a level of comfort in doing business forwards. And then indeed we start looking to far more dimensions. And I think that if I remember well, in the model we're developing currently, I think we're taking into account 270 different dimensions to develop that model. So it's quite extensive. We're not there yet, but that's definitely something that we want to continue working on.
Okay, great. Pia, anything to add?
Well, yes, we're also looking at some predictive models, you know, on the payment behavior area as well. But also, I think in the future as well, I believe that we are going to see more kind of disruptive eras, you know, more frequently even. So I'm also kind of looking into the area with our analytics team that if we kind of can predict that what is the impact, you know, when we're like scoring a customer, so that we can maybe change some of the parts, like if you you have a reduction of 20% of your turnover, how it will impact then the rest of your financial performance and so on. These kind of predictive models that we can play around and perhaps a little bit try to get ahead of what might happen, you know, with the customer portfolio as well.
Definitely.
Yeah.
Do you see a different role with regards to the previous period, for example, for salespeople? Do you feel like there is a role that they can play in this whole process?
If, well, at least our end, we due to COVID impact, I think even we had a close cooperation. It was more enhanced, so that we really reviewed, especially the impacted customers on weekly basis with the sales. So and I think we have some lessons that we learned from that enhanced cooperation, meaning that we would like to do that also more frequently in the future, which has helped in that aspect, because there's always two sides that we have to think about when we're doing risk assessment. Of course, the kind of the financial performance and the business performance, the outlook of the customer. But then we have the commercial side of the things that we need to also take into account and decide together what level of risk we want to take in different sectors, for example.
Sure, thank you. Peter, Mark, anything you would like to add to that?
Yeah, I think that was a really important point there, in that the company as a total sort of reassessed where it was from a risk perspective when COVID came in terms of not just having a look at the customer base and having a look at which customers we thought may be potentially more risk and the analytics behind that. And we have developed some analytics behind that in terms of identification of customers. But it really was important that the business actually has an understanding in relation to COVID, what level of risk they were actually looking at. And that partners up with a lot of the other aspects that we're looking at from a sales point of view, as well as third parties. I think we might talk about insurance a little bit later, etc. But really putting together, if you like, a total package based upon where the organisation wanted to be from a risk perspective.
Mark, anything?
From our side as well. I think there was a realization as a result of COVID, because I mean, there is sometimes a conflict between finding the balance between the sales targets and ultimately the risk targets, if we can call them targets. I think with COVID came the realization that perhaps we should truly be careful, and there is a far higher level of understanding, because this is hitting across the board. So this is not just a risk from a sense of finance, but also from a commercial perspective. And ultimately the goal from our side, and I think this is also the message we try to bring to our business partners within sales, is to be sure that our customers are still there today, but also they are still there in 6 months. So there is no point from our side to try to squeeze them, because we need customers just as much as our sales colleagues need customers. Ultimately, that is what we do in our company. We are there to sell. We're not a bank ultimately. So this is clearly something that we need to take into account.
Sure. Okay, thank you. Well, that brings us to a completely, well, it's obviously within the same space, but I mean, some of us, and among which yours truly, have been working remotely, so from home since basically the entire year. So how has this impacted your teams? And then I'm talking again, but internally, so within your own teams, but also its relationship to people from other departments, but also the relationship with customers. Again, don't know who'd like to kickstart.
No, I might start again. So
Sure.
Again, we have in UPM, we have a centralized small team for credit risk management here in Helsinki at our head office, who does the global credit risk management for all our businesses. And in that sense, it has been easy, and it has been great to see the team members since we opened the office around May. But of course, then many of other kind of stakeholders and customers, it has been on the virtual meetings only. But we haven't really encountered any issues with this remote way of working. And for sure, I think there will be face-to-face meetings in the future as well. But I think looks like it's going to be much less now that we have really made this kind of a quantum leap to this more established virtual ways of working. They are here to stay now as well. So I think it was a challenge in the beginning, I would say, a little bit shock to the system, to everybody. But once we adjusted to it, it has been working really, really great.
Great. Mark, Peter?
Yeah, we found it to be, it has been a real challenge for us, particularly on the credit management side, the collection side of the business, in terms of getting that contact with customers, because a lot of them, it was more or less just a change of the way that we had to do business. Centralized accounts payable departments weren't so centralized anymore, with people working from home and a lot of businesses operating from home, etc. So we did actually have to go through a bit of an update process in the way we actually did our contacts and etc. It meant doing some master data changes and correcting some systems in terms of contacts and the way we did our contacts. We moved a little bit, further down the electronic path, where before we would rely a little bit on salespeople making physical contact with customers. So that approach has changed. It has gotten considerably better now that we're all under the same sort of regime at the moment. So, yeah, but it has been a challenge. It certainly has been. The communication has to be really good, not just internally, but more so externally with your customers as well.
Sure, thank you. Mark?
We have offices in most capitals. So the credit department, the OTC department, for which I'm responsible, we have people everywhere. So most of the time, our communication is anyways done remotely. So that was not a major change from how we communicate. The difference is, of course, we're all communicating from home now instead of communicating from the office. So I think the change is mostly felt in the office where you are, because all of a sudden the team, when you don't have huge teams for OTC in each country, and they are then separated, so you don't have this direct physical contact. So for let's say communication from managers to managers, it's fine, but within a team where this cohesion is very critical, that has not been easy. And I think also we adapted quite quickly. I'm more, let's say, although we get used to it, I think it is like a second wave. Like now, this is tougher on us than the first wave. So I think the fact that this is like a rolling something where people will simply get fed up because there are more limitations into how we can contact each other. This is something that we find to be we're more afraid of. When it comes to collection, we do it anyways out of a central shared service center in Bratislava. So ultimately, this was anyways always done remotely, and we were also there able to adapt very quickly. So yes, we were able to cope with it. We were able to change, to adapt, have all the tools and IT support to do it. It's more a matter of how long this will last. That is the part where, yeah. But let's see. I mean,
well, let's hope we stay with the second wave and that we not hit a third
yes,
wave somewhere in spring of next year. And do you see, because that's something I personally experienced, that it was easier to get in touch with colleagues that you normally, do not speak a lot with. Do you see any, let's say, positive outcome out of that as well?
I find it I must say we got to know each other far more on a personal level. Ultimately, there are far more discussions than what would occur if you are in the office. So I mean, that is for me one of the really positive sides, because you set up like coffee breaks, so like little chats in the morning or in the afternoon, and I think this has truly helped us to keep people motivated. So yeah, I do see really positives coming out of it. Yeah.
Peter?
Maybe just comment what Peter said about the communication, that it's so key here as well. But maybe outside of this, we actually were kind of widening our GPS in Poland during this autumn and this spring, and we were recruiting about 200 people, and and first one started to arrive February, March time, and the rest of were interviewed all remotely, and all the 2 new team managers were meeting their new team members, first time remotely, and it just was an effort, of course, and we all had to adjust to the new ways of working, but we managed really greatly to do that one as well, and all new teams went up and are up and running, and in those timelines that we targeted to have as well. If somebody would have asked that me a year ago when we started planning this, that can we do this remotely, I would have said absolutely not. But then, it happened, and we were able to do it remotely as well. So the world has really changed in that aspect as well.
Great. Peter, anything you'd like to add to that?
Well, a very similar experience in that we had just put together a GBS, and a lot of new starters who could not come into the office and had to be trained and did the development via via Skype and meetings and Teams, etc. And it has been a challenge, but and in some senses it did slow the progress that we probably had hoped. I'm not sure whether we hit every single one of our targets, but we've gotten there now, and yeah, it was a bit of a challenge. I think it's probably going to be the new norm in terms of the way that we sort of do business globally now, whether it be centralized or otherwise, people working from home, etc. It has been quite a challenge. Even just the working from home part has been a challenge for a lot of people.
Especially with young children. Speaking out of my own
Especially
situation.
with young children.
And I mean, obviously, it's always better to meet in person, but then again, I think you get to know a person if you can see directly into their living room or bedroom or whatever, and that also gives, let's say, a different dimension. Okay, great. I'm just going to go to another set of questions, sorry, that we have received. Again, a completely different question, but an interesting one. So how would you compare the impact from COVID-19 to the impact from the financial crisis of 2008? And were there anything that you learned from that crisis that you see that you can now also implement, or was this something that you implemented, on a continuous level?
Well, if I start again, so
sure.
So I think the difference, of course, that we see a much wider government subsidies programs for companies and also for citizens. But for me, it's really different in that sense when you compare to 2008, that this pandemic will affect, or well, has affected already the kind of the social behaviors like personal space norms and social gatherings and even family, union, get-togethers. And but also then when you think of from the other aspect, it also affects like areas like, if you look at from the savings point of view, savings ratios and consumer buying habits and, all that. So in UPM, we clearly see this so that, for example, in the office paper demand, because none of us was working in the office, we were not printing as much at home than we did in the office, So the office paper demand went down with double-digit numbers, whereas then, for example, the label materials demand increased, and labels are used like on packaging, and pharmaceuticals and things like that. And obviously pulp as well, because it's needed in the toilet paper production, and we all know what happened with that demand. So I think for all those, they are very different than what happened in the last financial crisis in that sense.
Sure. Mark, Peter, anything you'd like to add to that?
Same, actually, we saw. I think it's a far more, it's a more profound crisis. It goes much deeper. There is also no clarity on the ending of it, because it's not something that we could grasp, and it's really flying over from one person to the other, from one country to the other. It has really limited our. It's the first time we are in lockdown. I never thought I would ever be locked down with a curfew. So these are substantial changes that we would never have expected when this started. We also see it in how customers are buying our products, where also for instance, the surge of internet sales. This is also something which is starting for our company. This is quite critical, and we really see that there is a huge surge then, and that is really changing this market completely, profoundly, and durably. So yeah, it is. I think you can for sure compare it, because it has a financial impact, but it goes beyond that because of the societal impact as well.
Definitely.
Yeah, I think from our point of view, because of the industry that we operate in, I think the real difference between the two events has been, for us, it's been the real lag period in what we've seen with COVID and the effect that it's had on sales and the overflow through to things like the credit management and the collections management in particular. From the GFC, the impact was relatively immediate from a credit point of view. Whereas now what we've seen is that we've seen a very longer lag period in how it's actually affected the business. And that's had pros and cons in that, you know, to some degree, it took a little bit longer for maybe the business to realize what was going on. But globally, that impact has now sort of come through, and we're now seeing, if you like, a very long lead time in what is occurring in our industry here. It takes a long time for it to affect you know, GDP sales in different countries and the net effect that it has on the industries that we deal with. So the effect has been quite slow, but it's going to be very prolonged, is what we sort of see as being the main difference.
Definitely. And then, because I'm conscious of timing, perhaps the last question. So what do you foresee beyond 2020? So what do you foresee that will happen in 2021? Because we obviously, well, there has been major changes. We don't have certainty on what will happen with the pandemic. We have a new president elected. We have a Brexit coming our way. So it will be for sure, again, a very interesting year. Any thoughts, any feedback on that? You can start again, Pia.
All right. Well, I think for me, this is something that even before the COVID-19 kind of the trust kind of, when we're talking of generally what was happening in the kind of atmosphere in many cases, and where maybe this Brexit and US elections also some way rely on, like whether it's a citizen trust or between the trust, the trust between the trading partners or countries or continents, unions, whatever, how you want to put it. It was really already before COVID-19 really low, all-time low even. And then now we have faced that we have closed borders, we have second wave of lockdowns, and well, if you look at the news, you have everyday arguments about masks and rules, and you know, everybody has an opinion of it, and really most likely as well, I think we're going to have fights for vaccinations, as you know, again. So between different parties, and it's all combined with all of this kind of a mistrust, and you know, between the citizens or even previously very close trading partners. And I think that all that what's going on can have a potential to widen this gap further and impact the economy even harder. But I feel, as I said, I think in the beginning already, that I believe there will be more like frequent market disruptions in the future, and even they can then bring something positive or negative to the economy, depending, of course, how you look at it as well. But I think that's still the part of the, whatever we say, new normal, that we all have to deal with anyway. But I see a lot of opportunities as well in these disruptions.
Yeah, I tend to agree. I think that what we're seeing is more a move away from the reactionary to really proactively having a look at these things, because it seems to be more and more constant with things happening globally around the world, whether it's an election, Brexit, whatever, that are causing changes and are causing, you know, changes in the way that we have to perceive things or do things, interact with each other, etc. And I think, you know, as opposed to being reactionary a little bit prior to, you know, 2000, I think now we're very much, you know, actively seeing these changes, and even sort of through analytics and a lot of digitalization going on throughout the world, we're really sort of anticipating these things and moving very quickly.
Yeah.
Mark, a final comment on that?
Yeah, I mean, I fully agree with Pia and Peter. So I think I mean, 2021, I believe, will still look a little bit gloomy. This is just the reality of what COVID is bringing to us. I think we will have to be indeed even more agile in a constant way, and looking far more than what we might have done in the past. I do remember we were making for customers, certain customers anyways, 1 time per year analysis, consider that to be sufficient, I don't think we're there anymore. So we will have to be far more constantly reviewing our portfolio in order to be prepared proactively and trying to identify what are the new risk factors which is coming through, be it this crisis, the COVID crisis, as mentioned, the Brexits, the elections, etc., etc.
Okay, great. Well, with this, I will make the transition to our chief economist, Dr. Mark Zandi, who will speak, I think, now in 1 minute ago. So we'll close this session for now. And thank you very much for joining. Thank you very much for your useful insights, and have a great rest of the day also to the wider audience, and obviously stay safe. Thank you so much.
Thank you very much.
Have a great day.
Great.
Bye.
Thank you very much.
Thank you.
Bye-bye.
Bye.